You know, there's a fascinating signal coming straight from the heart of corporate America. While all the headlines are screaming about economic uncertainty, the people who actually manage the money, we're talking chief financial officers, they're starting to feel, well, a little bit better. So why should we care about their optimism? Let's get into it.
I mean, it seems like a total contradiction, right? We're all feeling the pinch from inflation, interest rates are sky high. So what on earth are these financial leaders seeing that maybe the rest of us are missing? That's the puzzle we're going to try and solve today.
Okay, so to really get this, we've got to understand what a CFO's opinion is worth. Think of them like an economic weather vane. Seriously, their mood, their sentiment. It tells us which way the economic winds are going to blow, often way before the official reports even catch on.
So what we're talking about is something called CFO confidence, and it's exactly what it sounds like, how optimistic these financial bosses are feeling. It's a huge deal because it's a forward-looking indicator. Economists and investors, they watch this stuff like a hawk. It's not about what happened last quarter. It's all about what they think is coming down the pike.
And believe me, this isn't just some abstract feeling. It has very real consequences. When CFOs are feeling good, they bust open the company checkbook. We're talking greenlighting new projects, hiring more people, investing in new tech. But when they get cautious, they slam that checkbook shut. Spending slows to a crawl, hiring freezes up, and the whole game shifts to just plain survival. It's a super clear cause and effect.
All right, so we know their confidence is ticking up. The big question is, why? Let's really dig in and uncover the key reasons behind this shift from full-on caution to something a bit more optimistic.
Turns out it really boils down to a few key things. For one, consumer demand has been surprisingly resilient, especially when it comes to services. Things like travel and dining out. Also, companies are actually getting the hang of dealing with higher borrowing costs. Plus, inflation, while it's still around, is definitely showing signs of cooling off. And maybe the biggest one, there's just more clarity on what the Federal Reserve is going to do next. And that takes a whole lot of crippling uncertainty off the table.
And this quote here just nails it. It really gets to the core of this psychological shift happening. For so long, it was all about playing defense, battening down the hatches, preparing for a storm. But now it seems like people in the boardroom are finally starting to look at the horizon again. They're planning for the future, not just trying to survive the present moment.
But, okay, let's pump the brakes a little. We can't get too carried away here. This isn't some story of wild, unchecked optimism. No way. This confidence is definitely cautious, and for good reason. There are still some pretty major hurdles out there.
Yeah, because for all the good news, there are still some pretty serious challenges that remain. So what's still keeping them up at night? Well, for starters, high interest rates are a huge burden, especially if you're a company that's carrying a lot of debt. Labor costs are still elevated, and let's be honest, consumers are being way more careful with their money. And then you throw in the whole global scene, geopolitical tensions, supply chain headaches. Yeah, those risks have not just magically disappeared.
Okay, so you might be thinking, why does a CFO's mood in some fancy boardroom matter to me? How does this actually affect, your job, your wallet, your life? Well, it all comes down to this really powerful ripple effect. It starts with the CFOs feeling a bit more secure. That means their companies are more willing to invest in new projects. And, this is the crucial part, to hold on to the employees they already have. That leads to stable hiring. And listen, that doesn't necessarily mean a huge hiring boom, but it does mean fewer layoffs. And all of that helps the whole economy avoid a nasty downturn and instead find a path towards some steady, gradual growth.
So here's the bottom line, especially for the job market. This rising confidence, it's really more about playing good defense. It's about preventing a huge wave of layoffs and just keeping the economy on an even keel. Think of it less like a sprint towards a new peak and more like taking a welcome step back from the edge of a cliff.
So, where does that leave us? When you put all the pieces together, the cautious optimism on one side and those stubborn challenges on the other, what's the final verdict on the economy's health?
This quote right here, I think it just says it all. Resilience. It's not about a massive boom, but it is about a steady path forward. The economy is showing that it can adapt, it can plan, it can find its footing. It might not be that explosive growth everyone was hoping for, but in a world like this, that kind of stability is actually a really powerful thing.
And that kind of leaves us with one final big question to chew on. In a world that feels like it's in constant flux, maybe this quiet confidence is the new face of economic strength. Maybe it's not about the loud booms and busts anymore, but just that steady, quiet resolve to keep moving forward.